Hello everyone, I'm Sasra Bharti, National Editorial IT News at the Indian Startup Times. And today in an interview, we are joined by Karan Gala, a venture capital investor focused on backing high growth capital, high growth tech enable startups across fintech, consumer, B2B, services, and emerging digital sectors. We are Karan, thanks for joining us.
Hi, Sandhya. Good afternoon. Thanks for having me.
So, Karan, before we jump into the conversation, I'll take just a quick minute to introduce Indian Startup Study. So, we have been building the platform for almost 3 years now, and it's been a very organic and critical journey for us. But the kind of responses we have received over time, we have grown to one of the successful goals in India's ecosystem. Like with a close to 6 million impressions every month across our website and social channels and a very engaged community of 39 founders, investors. Now, talking about our focus has always been quality, deep insight the stories, thoughtful curated conversations with the founders, the investors, rather than just the headline. And beyond content, also, we are now evolving to a more network-driven platform that one actively connects touch with investors and enables meaningful conversation around capital and real world. So yeah, with that context, we're really glad to have you here today. So, to begin with, could you take us through your journey into venture investing and what led you to become founding team member at Nueva Capital in partnership with Lighthouse?
Sure. Sandhya, I began my professional journey back in 2017. I am a qualified chartered accountant. I moved into investment banking back in 2017 with Edelweiss, and later moved to Axis Capital again into investment banking. In 2020, just before COVID, I joined TVS Capital, which is an India-based private equity fund as part of their investments team. Working with larger, more established companies gave me a valuable foundation, but it also sort of made me acutely aware to how little structured support is existing for businesses in the early and most critical phase when they're growing from 0 to 1. That gap is what drew me towards early stage investing, and that is when I decided that I wanted to venture into early stage investing. It's now been nearly about 5 years since I've joined LC Nueva here as a founding team member. We have deployed close to about 500 crores across 35 strongly strong early stage businesses, and my role here has spanned across full life cycle, that is from originating, evaluating, leading negotiations, execution, end to end, managing portfolio, supporting fundraising, shaping strategy, operations, etc. And it's been an incredible formative journey for me here at Elsineva.
So how has your investment philosophy evolved from the early days of the fund to now?
When we first launched our first fund in 22, we identified a clear white space in the Indian investing landscape. There were funds that were making very early bets at pre-seed and seed stage, and funds writing larger checks at Series B and beyond. But there were very few, meaningfully supporting companies through the often difficult journey in between. That's the space we chose to occupy. Our thesis has been very straightforward. We back fundamentally strong companies solving real problems at a stage where right capital and guidance can be genuinely transformative for these businesses. We have been the first or the second institutional investor in majority of the companies that we have backed, many of which have go on to become category creators or category leaders. Few of the examples would be, Recker Club, Anorg, Grip Invest, Redcliffe Diagnostics, Rusk Media, Bima Pay, amongst others. Beyond capital, what we have seen is we have also placed a great deal of emphasis on team building, governance, and compliance at our portfolio companies. We have consistently backed businesses that prioritize compliance, strong fundamentals over aggressive cash burn, and that philosophy has been only reinforced over time. So this is how we have sort of changed our strategy positioning since our inception till.
Yeah, that's interesting, especially given how much the market has changed over the last few years. So, from your perspective, how would you describe the current state of India's startup ecosystem, like particularly in terms of founder maturity and investor expectation?
Sure. Um, Today's startup ecosystem, obviously, it's getting matured over time. For us, what's a demanding filter, what we see in companies is largely, disproportionate capital efficiency and a credible credible path to market leadership. We are always on the look for businesses that can achieve, outsized outcomes without being dependent on a lot of continuous capital infusion. On the founder side, we do value experience, but we are equally open to, backing the first time founders who demonstrate sharp vision and strong execution instincts. What matters more than pedigree is, clarity of thought and ability to sort of navigate the uncertainty. We evaluate every opportunity, across largely five dimensions that we, use as five sort of pillars for us: strength of the founding team, capital efficiency and unit economics, market size and opportunity, how's the competitive positioning and defensibility, and the potential, obviously, for a meaningful exit, given, we are at the end financial investors. That framework is what keeps us disciplined and consistent, regardless of however compelling the pitch might appear on the surface. Yeah. This is what, we sort of look out for into the companies that we tend to invest.
Yeah, that's amazing. And you have invested across fintech, consumer bank, B2B platform, creator economy, and health tech. So looking at portfolio companies such as Refin, Keepinvest, Dukan, Redscape, Lifetech, and Intentional and Rust Media. So what are the common founder qualities or business signals that give you conviction to invest early?
Sure. Like I said, what we obviously, value experience a lot, but we don't at the same time shy away from, backing the first time founders. What we have consistently seen across all our founders that we have backed are, a very matured professional guys, have been ability to attract strong talent and have strong ability to raise capital and work alongside institutional investors, and a greater emphasis on, building a larger outcome of these businesses. Clear path, clear vision to, what economics they want to build, clear path to, a profitability at some point in time, and not sort of just depending on capital raises in the future, to grow and survive, right? And a strong emphasis, obviously, on, like I said, governance and compliance is what we have largely seen across all our portfolio founders.
Since you are seeing multiple sector growth, so it would be interesting to understand where your optimism currently lies.
Sure. I think, we are like you rightly said, financial services, fintech has been something which has been very close to our heart from the beginning. We have deployed nearly 50% of the fund into this sector. We firmly believe, Sandhya, that, as India's economy grows over, five times over the next decade or so, financial services will be one of the most significant contributors and beneficiaries. What's been exciting over the decade is also over the last decade and is continuously happening is, the sheer pace of innovation, and this is what we are seeing across financial services also, which, we have been tracking for so long. Beyond financial services, we are particularly bullish on healthcare, consumer internet, niche consumer brands, as we see across, multiple categories, again, beverages, fashion, electronics, beauty, where there's significant growth for, a differentiated founder led businesses to emerge. We are also very excited about the overall, quick commerce space, how it's developing. We have one portfolio company of ours called Anor, which is into B2B quick commerce, which we believe it's still in the early stages of structural shift in how businesses manage supply chain and last mile distribution. So this is something which is going to get disrupted, and you will see a lot of, B2B quick commerce companies emerging in the next, 3 to 5 years. All this, obviously powered by the use of AI, will continuously keep compounding growth.
Are there any emerging themes or underexplored categories that you believe investors are still underestimating today?
I I I think, there's something or the other coming up every day, Sandhya, with the use of technology that we are seeing around us, right? I would say investors are always on the look of, new emerging companies trying to solve real niche problems. What we particularly, like I said, we believe that could become larger outcomes in the near future. Like I said, healthcare is going to be something which is going to see a lot of investor interest. You'll also see a lot of, larger funds who are sort of taking, operating bets into healthcare businesses. Consumer internet is second. Obviously, with the rise of internet, the overall usage, etc., we'll see a lot of consumer internet companies are doing really good. Followed by, like I said, Indian consumer space forever has been, under radar, but which has now started to change. Since we have started seeing, make in India brands, etc. these three sectors, these three, top level categories that we feel is something which is up for a strong growth, and obviously we'll see strong interest from the investor ecosystem. All this again, AI or technology will be strong enablers, strong supporters to all these sectors. It depends on how the new age professionals, new age founders can sort of plug in and use the technology to the best in terms of growing and solving problems. Yeah.
So they have been deeply involved in everything from sourcing and diligence to portfolio management and their research. So, like in today's environment, what really differentiates startups that successfully raises capital from one that struggles to attract investor attention?
Strong, I think, my the only differentiation that we see across founders is, like I said, understanding the problem in depth, confident to having confidence to basically solve that problem with clear economics in terms of what they want to build, clear product that they have in mind, ability to sort of attract talent and build teams and build the processes, etc., that's required. What we also see a lot of founders today, or we tell founders as a piece of advice, is we should stop treating valuation as a measure of success. It isn't. In today's environment, what truly matters is building a business that is capital efficient, resilient, and built to last longer, and not to optimize businesses for the next sort of fundraise. Too many founders today that we see try to building products, companies with an exit in mind from day one. Well, that's not inherently wrong, but when it comes to primary lens, it often comes at the expense of building something with genuine lasting impact. This is where we see the business that attracts the best investors and ultimately create the most value are the ones where the founders are deeply committed to solving some a real problem, obviously with discipline and strong integrity.
That's actually very well explained. And building on that, among your portfolio companies, are there any specific success stories or learning experiences from startups like Pum Pum Pum, Statio, or Nujoto that particularly reflect how the Indian startup ecosystem is evolving?
Sure. Some of the very interesting examples that I could, summarize in this call. We have a company which is a consumer internet company called Rusk Media. It makes content for larger, B2B OTT giants, Hotstar, MX Player, etc., and the likes of them. Doing really well. This is the category that I was talking about. As internet booms, and as India's internet consumption plus access to content, etc., is increasing. This company is obviously doing fabulously well for us. We have other larger institutional investors backing this company, and we have seen phenomenal growth in this company. Then we have this company called Anorg that I mentioned about, which is a B2B marketplace business, catering to the bottom of the pyramid, catering to the real Bharat that we call, right? Based in UP. They supply daily essentials like atta, maida, oil, sugar, water to small roadside eateries. Again, like I said, B2B quick commerce is just going to go grow very fast in the years to come, just like what we have seen in the B2C quick commerce space. We have one other interesting brand called Tanvi Beverage. It's a South India based beverage brand catering to tier 2 plus cities. Again, bottom of the pyramid, 10 rupee SKU, soft drinks, etc. Again, doing really well, growing slowly and steadily. And we are seeing the compounding effect here. We have been, sort of one of the early backers here since 2021, and the business has grown 10 times since then, growing very well, profitable, right? And a potential IPO to candidate down the line. A bunch of other companies. We have Redcliffe Diagnostics, which is again, like I said, right into that healthcare, spot that I mentioned about, doing really well. Diagnostics as a space has been growing, up on radar for a lot of investors, and genuinely the need of the hour. So these are the companies that we are strongly bullish about in the right space, seeing a lot of interest from investors, plus a lot more, right? And yeah, I mean, this is where we are seeing a lot of action.
Yeah, right. And lastly, today, founders often expect investors to contribute strategically beyond profit. So, like, as someone actively involved in your portfolio management, that ecosystem building, so what practical advice would you give to early stage founders on building long-term investor confidence and then particularly in the current market?
Sure. Like I said, Sandhya, a lot of founders that we speak to on day-to-day basis, my only piece of advice, has been I always urge founders to treat, governance, compliance, and ethical standards not as obligations, but as foundational to how they build. It's, one of the clearest signals of the kind of company and the kind of leader they intend to be. And at the same time, like I said, stop treating valuation as a clear measure of success. It isn't. What truly matters is, building a business that is, capital efficient, resilient, and built to last, and which is not, like I said, optimized to raise, further funds. Too many founders that I said, today's world trying to build with exit in mind from day one. It's like I said, it's not wrong, but it often comes at an expense of building something with genuine and lasting impact. So, this is what I would like to sum up and advise, the founders.
Great note to wrap up, Karan. Sharing your perspective on venture investing, portfolio building, and the evolving dynamic of India's startup ecosystem. Like your insights really added a meaningful depth to the conversation.
Thanks, Sandhya. I really love chatting with you guys and look forward to contributing wherever I can. Thank you so much.
Let me stop.